This is the Investor Connect podcast program. I'm Halti Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Harlan Martin with Investor Connect. Today we're here with Harlan Mandel of Media Development Investment Fund. Harlan, thank you for joining us.
It's a pleasure to be here with you.
So what was your background before investing in early stage companies? What did you do before this?
Well, I'm a lapsed lawyer, as I like to say. So I started off practicing law for about 8 years. And then in 1998, I came on board with Media Development Investment Fund.
Great. And so what excites you right now?
Well, I guess excitement can take a couple of forms, both positive and negative. So the negative side, to start with, it's a very challenging time around the world for independent news media, which is what we invest in. And when I say challenging, leaving aside the business environment, independent journalism is under pressure in more and more parts of the world. And it is more and more something in short supply. So most recent figures show about 85% of people on the planet do not have access to free media. And in this era of fake news, where it becomes harder and harder to differentiate between accurate reporting and inaccurate, manipulated disinformation, the importance of high quality news media companies is more than ever. On the business side, what excites me is, we might go into this in a little more detail, but the current trend with digital news media is landing on paid content as a dominant revenue model. And that means revenue models where companies are getting their revenues from their audiences. And, we can talk about it some more later, but for the kind of companies that we're interested in, which provide high quality independent news and has a strong trust relationship with their audience, they are, I think, the optimal beneficiaries of that kind of a revenue model.
Well, great. Well, let's talk about your fund. You're an impact investment fund. You're organized as a nonprofit. Can you tell us a little bit more about your mission and how you work with that fund?
Yes. So we're what these days is called an impact investment fund, which means that we invest in order to advance our mission. And our mission is helping build independent media companies around the world, focused on countries with a history of threats to independent media. Ultimately, we're looking for companies that provide the news, information, and debate that people need to build free and thriving societies. So with that mission, we are looking to invest in companies that will provide a return. So we actually make both debt and equity investments. So we look for different kinds of returns. But even though we're a nonprofit, so we are not treating these investments as contributions. We expect to get a return in our funds back.
Can you talk a little bit about your investment thesis for getting a return back? What's your criteria and what exactly are you looking for in startups that not only fit your mission, but also fit the investment thesis?
So I think our investment thesis boils down to, in its most simple terms, we're looking for companies where trust that their audience has for them is their competitive advantage. And that's what really distinguishes them from their competition. And in the markets where we work, which is primarily frontier markets and emerging markets, as I implied before, these kinds of companies are very rare. And so having that kind of relationship can be a strong competitive advantage.
Great. Can you talk about one or two startups you funded that fit that thesis?
Sure. So two current portfolio companies. So one is, and in a way they kind of illustrate our two basic investment theses. So one is a company called Scroll.in in India. And in just a few years, they've become by far the largest digital native news organization in India with a large audience producing very high quality news. So they have kind of swept journalism awards both in India and internationally. They have played an important part in the current debate, political debate going on in India, as well as playing an important role in covering culture and other areas besides politics. And their revenue model at the end of the day is based on audience growth. So as I said, they've grown very fast. They're probably the number 7 news site in the country, English language news site, I should say. And that's way ahead of any of the other digital startup news organizations there. And their revenue model is based on advertising. And so they're driven by scale. And so in certain countries like India, where that kind of scale is possible, we think that this is a good model to pursue. Going a little further east from here to Indonesia, we work with a company called Kata Data, which is a very different model of company. So the company was founded by 3 of the leading investigative journalists in business news in the country. And Kata Data's focus is on financial and business news with very high value content. And the model there is that they are producing content that certain sectors see as having very high value, and therefore they're willing to pay a high price for subscriptions. And then there's a much broader layer of news that's aimed at the public, but that has more general interest quality. And the company has an impact on the news conversation through that layer of its news delivery.
Well, you fund deals from across the world, Africa, Asia, US, et cetera. Do you find a difference in the startups that you deal with based on the location?
Well, I think it in certain ways. So I think that in certain markets in the news field, there are different levels of expertise available. One of the biggest issues is expertise around digital media and digital operations. So in many countries where we work, those skills are in very, very short supply and in very, very high demand. And being able to access those skills for the kind of companies that we work with can be a challenge. In other markets, that's not the case. Then in terms of the kind of business that you're going to build, it's hard not to take account of the audience scale that you're dealing with. So in a country like India or Indonesia or Brazil, for example, you can get very large audiences because of their large populations. But in other countries, particularly countries with unique languages, for example, if you take something like Cambodia, the scale of the market is much smaller and it requires a very different approach.
Very good. So let's talk about the state of investing in media. How do you see the industry evolving? What changes do you see coming up? It seems like we're in a very tumultuous time right now, or have been in some time as well. But where do you think we're going at this point?
So I think it's a really interesting time and a hopeful time in a way. So I think most recently there are 2 phenomenons that are happening. So on the one hand, you've got VC-backed media companies like BuzzFeed and Vice and Vox and Mike.net, and all of those kind of plateaued in terms of their revenue growth. And it, I think, made it clear that the idea of news media as kind of business that's going to give you a hockey stick kind of return is a myth. And so these are really good, solid businesses. They can deliver very strong profits over time, but they're not going to have that kind of corn kind of growth. So, and the impact of that is, frankly, it has brought valuations of companies, media companies, down into a much more realistic place. So as an investor, I think that's good. At the same time, on the other end of the world, it is companies like the New York Times, the Washington Post, that have kind of figured out how to be profitable doing very high quality news. And part of that is a kind of shift in online culture towards a willingness to pay for content. And there was a period where everybody felt like news should be free online and nobody was willing to pay for it. That's changed now. So people have gotten used to paying for content online through Spotify and Netflix and the equivalent in different areas. And that's kind of bled over now into news, where people recognize that for high quality news, there's a value there, it means something to them, and that they are willing to pay for access to that. So that's a very good development in the news field.
So as you mentioned, when the internet came in, it tended to make all content free. And then today we see the rise of fake news and deepfake videos and so forth. Do you think that's going to revive the art of journalism and put them back in the driver's seat for providing some sort of check and balances on just anything that goes up on the web is not true, and having somebody stand behind it is really a value and people will pay for that? Or do you think it's just the fact that they found a business model that actually delivers quality content, but for a price, and so now there's money back into the system because the business model's caught up to the technology?
Well, I think they're both true, and in a way mutually reinforcing. Some people have said, in fact, I think Donald Trump himself has said that he saved the New York Times. And I think there's a certain truth to that, in the sense that the sense of crisis around accuracy and the value of facts has increased dramatically and has really pushed people towards high quality news providers and made people recognize how important that is for living in the modern world. I think there's also, in terms of the power of disinformation, there is of course a role, and there's always been a major role for news media, for high quality, responsible news media, to counteract that. But I'd say a constant battle. And the front line shifts every year as the technology shifts. So I don't think there's any way to ever claim total victory, but it's just a fight that has to keep going on. The one piece of it that I think holds some promise is that I think younger generations who grow up are more adept at distinguishing between fact and misinformation. They're appropriately cynical about what they see online.
I see. Well, let's talk about the challenges for the startup in the media space. You mentioned a moment ago the challenge of those in smaller countries had a more limited audience and perhaps a more limited runway for what they were doing, and those in more populous countries may have had a bigger market and could potentially monetize it more. But in general, what are the challenges startups face in media around the world to start up their business?
Well, I think the first thing is, a lot of news startups tend to get started by journalists, and I don't think that's a formula for success. So generally, I think you need at least 3 skill sets among the founding team for a news media company. And that is, you do need a journalist or somebody who really understands content and all the various ways of ensuring accuracy around content and delivering it in a way that is of interest to people and that reaches people. You also need somebody who really understands technology and somebody who really understands how to run a business that is not the same person as the journalist. So where the companies we've seen that have the most success are companies that are founded by people who kind of balance those two interests, the business and the journalism. Because often, you're having to make decisions that weigh one of those things against the other. And there needs to be a proper balancing of the two.
Great. So there's a lot of sectors inside the media world and a lot of countries that are participating. If you had to pick 1 or 2 sectors or countries that you would call out as a good immediate opportunity for investors to pursue, what would you put at the top of the list?
Indonesia. I think that's a country that is rapidly expanding, and the numbers of new people coming online every day are quite large. And I would put India in the same category.
Very good. It sounds like there's a lot of opportunity for journalists and for media startups to take advantage of the growing populations that they have there. So let's talk about your advice for people investing in startups. What do you advise investors to do before they invest in a startup in the media sector?
My best advice is invest through us because we know what we're doing. And
it's probably a good idea. It's not a simple thing to do. There's a lot of nuance to this for sure.
There really is, in terms of having systems for evaluating the integrity of content and the networks of expertise that are needed to kind of help these companies move along and stay at the cutting edge. All of that, I think, requires some kind of an institution like ours, as opposed to just individual investors out there. But leaving that aside, I think the other advice I would have is to try to stay real. Make sure there's a real revenue model there from the beginning. Focus on bringing in revenue from day one. Even if you can't bring it in from day one, be focused on getting it in as fast as possible. And I think not only in the media field, but in many sectors of the VC world, there are a lot of companies that have come into being based on air. The revenue model is going to always come with scale, and unfortunately it rarely happens.
Very good. So what's your advice for people running startups in the sector? You said get a business model that produces revenue very quickly. What are the best ways to do that, for example?
So in media, there are four basic ways of getting revenue. So one is from your audience, and that is people paying for your content. And that can take very different forms, from subscription to membership model, which is becoming more and more popular, to selling one piece of information or small pieces of very high quality information. So that's one model. The other model is all the different kinds of revenue that come from delivering your audience to somebody else. So that's advertising is the chief model there. But there's also, for example, sponsorship of events. There's native advertising and other kind of forms of advertising that are unique to the online space, programmatic advertising. All of these forms, they all depend on leveraging your audience for somebody else's benefit. Thirdly, you have things like events where you're taking your name and not your content, but your brand, and using that to aggregate an audience. And then the fourth is technology. So there are media companies out there who are developing unique technical solutions that can be of interest to other companies. So choosing among those four, or some combination of those four, because most news media have to rely on some combination of those various revenue models to make it work.
Well, very good. That's quite a unique array of things that some have been doing a lot, like advertising and sponsorship. You see that quite a bit. But developing technologies that others can use is certainly a game plan from the venture capital market. So it's a great way to leverage your expertise into other applications for revenue. So appreciate that.
That's right. I think the biggest example right now is the Washington Post, which has developed a very strong content management system and is licensing that out all over the world to other news organizations.
Okay. Very good. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, I think we've covered a lot of territory. We haven't really talked about impact investment as an issue in and of itself. This is something that is a world that we've been a part of before it existed, in a sense, since we've been working since 1998 doing this. And for folks out there who've never heard of it, I think it's worth looking into and trying to understand what's happening in the space. It's becoming more and more central to the kind of finance that's out there for making the world a better place.
Well, it seems like there's a big shift from nonprofits to impact investing. We see a lot of funds moving from the first to the latter. And it seems like the new generation, millennials in particular, are driving that shift where they really want to see money going into impact investing right alongside for-profit businesses. Is that what's driving it, or do you think there's something else that shifts us into the impact investing world?
I think that's exactly what's driving it. So talking to wealth managers, I know they've been responsive to their customers in trying to identify opportunities in the impact space. I think the challenge is that the space is changing quite a bit. So from, I'd say, very mission-focused investments where achieving a mission comes first and getting a profit comes second, more and more folks are crowding into the impact sector, investing with the chief goal is to make a profit, and the mission, in a way, is not the main point of what they're doing. And I think there's this question of additionality that comes up, which is, if you would have done this investment anyway, why is it an impact investment? But that's a philosophical argument that's going on in the field. And it's really a question of, for investors, what it is why are they doing it? And that's something that everyone has to answer for themselves.
Well, it seems impact investing has an innate advantage over for nonprofits. Many nonprofits simply don't have a revenue stream, and so they must rely upon donations, and those go up and down. Impact investing is tied to a for-profit company, and so there's revenue stream to give it more longevity, sustainability. Do you think we'll see more impact investment groups thrive longer because of that, because there's a revenue stream that's attached to it? Or do you think that's not going to matter at all?
Well, I think, first of all, it's not a panacea. Right? There are a huge number of problems in the world that can't be solved with a revenue model. But for those that can, it offers much more access to capital than philanthropy can provide. So finding those kinds of opportunities, there are a lot of those opportunities out there, I think. Businesses that do serve a wider purpose, or that can serve a wider purpose.
Okay. Well, very good. Yeah. Well, you're right. There's certainly a lot of work that needs to be done out there, and glad to see these impact investment funds like yours come into place to start tackling them. And I know there's plenty more coming that can help with the issues as well. So how best for listeners to get back in touch with you and maybe to learn more about your fund?
Well, I'm reachable by email at harlan.mandel@mdif.org. And as a first stop, our website is www.mdif.org. And we have a lot of information up there that people can take a look at.
Great. Well, we'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon. Looks like there's a lot going on around the world that we'll have plenty to talk about, and looking forward to the next time.
That would be great. I look forward to that too. And thank you for the opportunity to share this with you and your listeners.
You're welcome. Thanks for joining us. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Alti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.